there's parts of America that have booming real estate. For example, north of Dallas, there's a real estate boom happening where there's housing developments being built too fast for sewage to keep up. And so we are finding ourselves putting in these modular units for that housing development. They don't have to worry about sewage. It makes it faster and much cheaper. But I'll tell you, we think, our killer app, and that is doing sanitation for mobile homes.
Welcome to Personal Finance Cat, where I share my personal take on personal finance. Hi, Rex. Welcome to the show.
It's such a pleasure. Thank you very much.
Yeah, of course. Likewise. So you have a very impressive background. You have a very varied career path. Now you are running a water company that's based on certain technology. Can you maybe start by telling us how your various background working in different companies, projects, etc., helped or led you to create your current company?
Yeah, just to go back a little bit, I was raised internationally because my dad was an international businessman. So we lived in various countries, which means I have no home. But it also means I think that I have a pretty good global view of the world. Many Americans, I think, are very America-centric. This is, the joke. There's trilingual, bilingual, American.
Right.
Right? So I have that, and then I worked for quite some time in the nonprofit space. Also had a career for a time as a professional merchant mariner at sea in the South Pacific. Got to know parts of the world that, again, Americans don't get to see. But in the early 80s, I really became really excited about the potential of technology to transform the world. As Elon Musk says, technology is a double-edged sword. It can be used for good or bad. And so I wanted to use it for good, do my part. And I started in New York, and frankly, that was kind of a disaster because I was overambitious and I had no capital, and just basically got kind of discouraged, and learned a big life lesson there, which is don't ever get discouraged, because there's always a solution, right? And it took me some time to recover from that. By the time I did, I was in Los Angeles, and I was in high tech, really in the .com, which is where I found, I think, my best, happiest place was using computing for communication, not so much for computation, right? So yes, computers are great calculating machines, but they're also wonderful communication engines. And that's what really excited me. I went through the .com, and from 1995 to 2005, I learned what I had not learned before, which is the corporate world. I went up all the way up to C-level and got a company in 2006 onto the NASDAQ as the number 2, as the president and chief operating officer.
Oh, wow.
And of course, like all number 2s, I thought I could be a better number 1, right?
Of course.
Kind of how it works. So I did talk to a fund that I got to know, and they agreed. It's like, yeah, we think you should be a CEO, but we're not doing tech. We're not doing tech anymore. We're doing green.
Yeah.
And green for that company that they wanted to launch was creating biofuels from algae, microalgae.
Interesting.
And that was a wonderful thing. I had for about, for several years, really the first 7 years of the company. And we just, we had a lot of good press. We had a lot of breakthroughs. We actually did create small quantities of the biofuel, and all kinds of fascinating things happened. But eventually, the price of crude oil, which is being kept artificially high, crashed because of fracking. And all of a sudden, we didn't have a business anymore. And so we had to make a decision. And since I no longer give up, right, we pivoted this algae extraction technology into sewage extraction, right, wastewater extraction. Same technology. And that was the beginning. We took the company from a previous name into the current name, OriginClear. We clear up the water. And at first, I was very naive. I thought that everybody wanted technology. that's my experience in high tech, very technology focused, right? What's new, what's great, and just race to the top, race to the top. Well, in water, it's very keep it stable, don't change anything, which is good in a way because you want to maintain standards, but it also inhibits innovation. And so we found that if this technology was not getting any traction, in fact, we learned that it would take more than a dozen years to get adoption, and I wasn't ready for that. So we then looked at what was going on in the world, and what we found out was that in America, other parts of the world are different, but in America, we built centralized water treatment systems. We send everything to a central location, and that works fine, except when it becomes overloaded. Now, I grew up in the time of mainframes, and mainframes, you had to get on a list and get a time slot that you would have access, and you would come there with your little punch tape, and you put it in the reader, and you would run the punch tape at 35 characters per second, 35 baud, literally. I don't know if you're a technology person, but for me, it was ridiculous that it was that slow. But anyway, and then the mainframe would do its computation and give you the answer, and you'd walk away. Well, that model breaks when you have too many people trying to access the mainframe. You get a big pileup. And that's what we have in water, is we have way too much demand for for freshwater and wastewater treatment by the utilities, and they are not properly funded. In fact, I just saw a stat that right now the American infrastructure is running $100 billion behind every year for infrastructure. But now we have the new problem, which is climate change.
Mm-hmm.
Which that gap is going to add tremendous amount, so that by 2029, I'm reading from a MSN story that I just saw today, the annual gap for just drinking water and wastewater investment by 2029, which is 5 years from now, will be almost $500 million a year. Annual gap.
Oh, wow.
Well, nobody's coming up with that money.
Mm-hmm.
It's still a lot of money. So what do you do? Well, what you do is you unburden the system. 90% of everything that is of all demand for water and wastewater is by industry and agriculture. 10% is humans. Well, let's serve the humans by taking the industry and agriculture off the system with their own. Why are they sending their dirty water to a central point? They could easily treat it. It doesn't make sense. Mm-hmm. So this is what we call decentralized water. I became super excited about this in 2015, 2016, and we started pursuing that as a business, not a technology, but as a business. Mm-hmm. And so we built companies to make that happen. And now the companies that we built, we packaged it up into one company that is now in the process of merging with a NASDAQ company that you might have heard of, which is called blank check companies. These are companies that they just have money, and they're trying to. And so now this thing that we built that helps businesses do their own water treatment is going to the NASDAQ, we hope, and we will have done, I think a major breakthrough for the water problem by making it possible to have self-sufficiency by users as opposed to depending on the central system.
Okay. That's very fascinating. So I never thought about water problems. I think living in this country, we have the luxury of having access to water. So it never sort of occurred to me what were the challenges in the background. But what you said kind of makes sense. But just to make sure that I understand. So you're saying that no matter what the usage is or what the purpose is for the water, it all comes to the same central system to be treated and then recycled. So
well, usually it's not recycled.
Oh, it's not.
America has less than 1% recycling rates.
Oh, wow.
So the only way you can recycle is to do it yourself, right?
Okay.
Because the central system, you see, it was built in the days when America was not thinking about recycling, it was thinking, I don't know, where are you based?
New Jersey.
All right. So across the country in LA, you've seen videos of those long concrete rivers that they built,
Mm-hmm.
right? Dry concrete riverbeds. And they
Uh-huh.
were in that movie Grease, for example, right?
Yeah.
Well, they were built by the Army Corps of Engineers, and their only purpose was to get all the fresh water to the ocean as fast as possible.
Mm-hmm. Mm-hmm.
Well, wait a minute. That's fresh water. What are you doing?
Mm-hmm.
Keep it, save it. But no, the mentality was get it out of the way, flush it out, get rid of it. Well, now we think, wait a minute, fresh water is a finite resource.
Mm-hmm.
So we need to conserve it. We need to recycle it. Already in LA, those same concrete rivers are now being broken up into green areas that absorb the water instead of sending it to the ocean. So it's slowly changing, but it's a very slow process, right?
Mm-hmm.
The best analogy, for example, is when we had landlines and then we were moving to cell phones. You didn't want to then try and improve the landlines.
Mm-hmm.
You just went straight to the cell phone infrastructure and you maintain landlines as a backbone. Well, that's what we have. The new philosophy in water is, if a company like PepsiCo, which has committed actually to more than 100% recycling, because of course they take in things like fruits that have water, so they can actually get more than 100% reuse of their water. They're now committed to that. They didn't used to be. They used to be just, okay, send it to the central system, get rid of it. So big companies and now smaller companies are all recycling, and it's only possible if you do it yourself. And so now we have a whole new world, which is happening right now in water. And the reason it's important is this. We have interesting trends happening. For example, COVID so put on an overdrive a whole process of people moving away from big cities because they could, and it started as a small, before COVID, it was a small number of, a stockbroker moves to Vail, Colorado because, hey, he's trading stocks. He doesn't care. And he's at a ski resort. How cool is that, right?
Mm-hmm.
And so then COVID made it a huge thing. But the problem is rural water systems don't have the capacity. All the capacity in America is set up for the big cities. So we have the problem is becoming worse and worse. There's 150,000 water systems in America, and most of them are in real deep trouble, and they don't know what to do. Mm-hmm. So, in addition, the waste that comes out of industry is far worse than the waste that comes out of a home. Mm. It's got forever chemicals, it's got dioxins, it's got all kinds of things. Well, why are you sending it to the city to be treated along with the home stuff? You are the polluter. You treat it. And then you can recycle it, reuse it as many times as you want, which lowers your expense. It's good for the environment. And then eventually you can either put it into the groundwater or you can send it to the city. That's fine. Meanwhile, the city, what can they do? They focus on the people. And that's the goal of all this, is to restore the ability of water systems all over America and eventually the world to serve the people. Now, in other countries, like India, for example, there is no infrastructure, not even a bad one.
Right.
But the good news is you can leapfrog the problem. Same thing as they did in Africa with cell phones. They didn't bother building landlines. They just went straight to cell towers. Same thing in the third world is we go straight to localized on-site treatment. So little pods that are built for housing communities and industry and farms that treat their own water, reuse their own water, and it's much better than trying to build, because do you think India has $1 trillion? No. I mean, it's these are giant numbers, but if they're done individually at the level of the user, it can be done.
All right, great. So I think I understand the problem statement now. So let's talk about the solution, OriginClear. So what is the solution that you came up with?
So We created 3 companies over time. The first one we purchased in 2015 does this point of use treatment for large companies like power plants.
Okay.
Custom work, high dollar value, but it's not not a assembly line, right? It's not standardized. It's very custom.
Mhm.
The second company we built from scratch is called Modular Water Systems, and it's highly standardized pods, containerized systems that are built completely in the factory, shipped out, dropped on a pad at the housing development or the brewery or whatever, and plug it in water, plug in electricity, it's running, right? And that is the scalable solution,
Mhm.
right? Because if you're going to have decentralized water, you need to have downsized systems for those locations.
Mhm.
You can't have big ones. You get, sometimes a brewery only has the corner of the room to put the whole system. So you got to have small. The third solution is a financial one where we created essentially a fintech that enables investors, regular Main Street investors, to invest in water systems so the client does not have to pay capital. They just pay by the gallon, water as a service.
Oh.
And that'll speed it up because right now we're very busy and our numbers are rising, but it's always, if you're, for example, well, I'll give you an example. There was a mobile home park that we worked with before we had this water as a service thing. And the owner had to give up half of the equity in the trailer park in order to pay for the water system that the state was requiring to do. So if she didn't do it, she was going to be shut down. But then when she did it, she lost half of the trailer park
Wow.
because she had to come up with $500,000.
Mhm.
See, so capital is a real problem because it results in destruction of ownership. Because people don't budget. A brewery wants to make beer; they don't want to treat water, right? It's not in their business plan. So what we did is we took the whole capital problem away. Say, here, sign this 10-year contract, which is renewable, and you'll pay X amount. And then so it's a basic flat fee with consumption. Um, additional charges for if it goes above a certain amount. Very simple, works great. We still own the machine.
Mhm.
And that creates the asset base for these investors. These investors are putting money into Water on Demand, which is the name of the company, and now they get profit shares, but they also have the ability to take a lien out to enforce those royalties. So because we still have the hardware. So it's a lot like how they do oil wells, that they have people invest in oil wells and they get royalties, and it's secured by the oil well. Very similar. So that is going extremely well, and here's why.
So sorry, in other words, so you still install the system in, let's say, the trailer park, but the person who is using it doesn't have to pay all of that upfront. They just pay it as a service or as a royalty.
Well, they pay it as a on the meter. They're
Uh-huh.
like you and me are accustomed to paying on the meter. It's already standard, right?
Mhm.
They pay for the usage. They have a contract. They do not own that machine. It's
Right.
placed by us as a service unit, and it's like anything that's that's a service. Basically, it's owned by the service provider.
Mhm.
Let's say, for example, a data center. You don't own a data center. You just pay for use of it, right?
Mhm.
Same thing. So these units are out there, and we have the ability to take them back if the client doesn't pay, which is very bad for them, because right away they get shut down. So we have tremendous security for what we do because if they don't have a water system, they'll get shut down. All right. So then what we did was we set up this whole system whereby we talk to regular investors, get them to put in money, and then that gives them that profit share, but they also get equity in the company, et cetera. It's a very, very generous offer. And the reason we like to give a generous offer is because these people are regular people like you and me. They generally hold on for a long time. They're not don't flip it. They're not like Wall Street. They don't try and squeeze water out of a stone. They basically believe in your mission. So they're a good partner to have. And we've had, investors that started very small, and eventually they invested over $1 million because it was just, we were doing so well. So the real problem we have as investors, you and me, is we don't have access to the really, really, really good deals. Ashton Kutcher, he was Airbnb early on. He made 300,000%, and good for Ashton Kutcher.
Yeah.
But what about us?
Mm-hmm.
Right? Well, in water, we have this opportunity because right now the big water companies are still working with the cities, with the utilities. Why? Because they have all the lobbying relationships, and it's very rich. And they don't want to get involved with the small stuff that we're doing. This is a perfect opportunity. This is a perfect moment for us to step in and be basically engineer a revolution in how water is treated in America and eventually in the world.
Yeah. Gotcha. So the 3 companies that you mentioned, are they public companies or private at this point?
So they were divisions of OriginClear, which is a public company,
Mm-hmm.
but OriginClear has been a penny stock for a long, long time. We're on the the over the counter, and then we had an opportunity to merge with what they call blank check company, right?
Mm-hmm.
But we didn't want to merge OriginClear, so we took all of these three divisions. Well, that sometimes they're companies, sometimes they're divisions, but the three businesses, packaged them up, achieved a valuation for them, and now they're being merged onto the NASDAQ into this blank check company. OriginClear stays behind to do more like it. We will become an accelerator for water businesses.
Gotcha. So I also know that you created this water stable coins. Does that have anything to do with capital raising and whatnot with this company or the 3 divisions? Or
Well, Hattie, I am a big enthusiast for cryptocurrency. In 2018, we tried to do a crypto called Water Chain, and it was a big adventure. And eventually, I had to shut it down because, the cryptocurrency has to relate to something tangible, in my opinion. And in this case, it was water, but we did not have a stable price for water. The prices were extremely variable. So then we went ahead and we built the underlying business, and now every gallon in our water on demand system is monetized, right? So there's pennies attached to every gallon of clean water created, and that creates the basis for a coin. Now, what is the coin? Well, it's very simple. What we call $H2O is envisioned, and we filed both the trademark and the patent for it, is envisioned to be a way to package up these royalties that go to the investors and also their entire future revenue stream as an investor so that they can then resell it. Because it's basically a digital bond, right? Now, the problem occurred. That was fine. Great idea. Lovely. And I was going full speed until 2020, when there was a change of the SEC and they did not like crypto at all. Like, no. And so okay, we're not doing crypto. And so water on demand, what we're pushing onto the NASDAQ, has zero cryptocurrency, but because you can pay dividends using ACH. It's not mission critical, right? You can just do direct deposit, and the world knows how to do direct deposit. So that's what we do now. But a future incubation of OriginClear is going to be that cryptocurrency, which would, eventually be put to use to create, we hope, a future world water market. Because right now, if I have a water risk in Northern California, I can't offset it with options on Singapore water, for example. Possible. There's no market. Nobody can do it, right? Well, once we build the water on demand structure where people are paying per gallon, and then we export it to other financial centers to have other partners do it, then there'll eventually be a water market, and that currency will be useful. It's not right away, is the point I'm making.
Okay, gotcha. So then going back to the solutions, right? What is sort of your typical customer? Like, who would have the incentive to use, let's say, the modular water treatment system? Like, it's a little bit hard for me as an individual user to understand, like, why do I have the obligation to treat my water? Because I just use it, it goes down the sewer. Maybe the city is taking care of it. So, can you talk about that aspect a bit more?
Well, Handy, you as a private user should continue to stay on the system. The system is built for you.
Mm-hmm.
It's not appropriate to try and make all. I mean, yes, Fuji Water has a home system that does all this treatment, but it's not this. You don't handle the 10% problem. You handle the 90% problem. The 90% problem is industry and agriculture. So who are typical users? For example, there's parts of America that have booming real estate. For example, north of Dallas, there's a real estate boom happening where there's housing developments being built too fast for sewage to keep up. And so we are finding ourselves putting in these modular units for that housing development. They don't have to worry about sewage. It makes it faster and much cheaper. But I'll tell you, we think, our killer app, and that is doing sanitation for mobile homes. Last week, I heard Grant Cardone say on an X space, I'm investing $2.6 billion into trailer parks. Why is it so much investment in trailer parks? Because Americans are getting poorer.
Mm-hmm.
And they're going down the economic scale. And Generation X, Y, and Z, they can only, and never mind the boomers, and everybody can, more and more, they can only afford the most basic real estate, which is trailer parks and also RV campgrounds. People are living full time in RV campgrounds. They're being expanded very, very fast.
Mm.
They take an RV, they plug it in, and they live there.
Mm-hmm, mm-hmm.
Simple solution. So the area is doing fantastically, and it needs our help. And so we decided to focus on, because you can't do 12,000 things at once in terms of industries. So the industry that we are focusing on right now is the industry of mobile homes, be they mobile home parks or RV campgrounds. It's a giant industry. And it's going to get, as you saw from that Grant Cardone thing, it's going to get much bigger. And so it makes a lot of sense to focus on that. And what's great about mobile home parks is they all have identical needs. Very easy sewage. Why? Because it's human sewage. So it's not terrible. It's not dioxane or whatever. Number two, they're all pretty much the same output, same size and output, right? They're all pretty much, 50 units kind of thing. So we got a modular system pre-approved by the Texas Environmental Quality Commission. And now we're rolling it out just like assembly line, bang, 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 to all these trailer parks, because they're all being pushed to upgrade their sanitation. And what's going to make it go fast is this water as a service. So you come up to the mobile home park, they don't have to finance $500,000, which they usually cannot. You say, here, sign here, and your tenants can pay the water bill.
Mm-hmm.
Problem solved. And so, and they don't have to come up with capital. Our investors come up with it. So we are right now in the stage of doing our first commercial pilot. We have we have a guinea pig. They're willing to be the guinea pig, and they will be the showcase. They'll be the model system. And we're working on that right now, because Water on Demand, which is the name of the company, will ultimately do mostly water as a service. It will do very few pay up front, because when you sell something pay up front, that's a one-time sale.
Mm-hmm.
You want continuing revenue, right?
Right.
So it's a better model for everybody to have pay as you go.
Yeah. I've never invested in mobile home parks or trailer parks, although I do have some real estate. So the owners of those parks, they are responsible for the water treatment or sewage management.
Right. And the way it was done for a long time, see, most of these, there's something like 34,000 of them. They still have old-fashioned septic tanks or lagoons. You know what a lagoon is, right?
No.
They just throw all the poop in a pond.
Oh, wow.
And leave it.
Oh,
That's
wow.
it.
Septic tanks I've heard of. Yeah, some older
Well,
homes here even have septic tanks or.
and septic tanks are a good solution until they break.
Mhm.
So the problem with septic tanks is that they have if they're not maintained properly, then there's a failure, and now it pollutes the groundwater. There's viruses and bacteria. It's a
Mhm.
very poor solution. So the state environmental agencies are busy they're forcing all the trailer parks to upgrade from septic tanks or lagoons into proper sanitation systems that treat the water, and they can then use it for irrigation or send it to the city, whatever, it doesn't matter, but it's treated, it's clean. And that is happening all over um, America. But as you know, most trailer parks are in the south, you know, south of the Mason-Dixon line.
Mhm.
So it's more the south, like Florida, Texas, Georgia, Carolinas, etc. That's where the bulk of these are. Texas is a very big center for trailer parks, and so it's a market that has a highly standardized requirement that we, as I say, we got the pre-approval, so there's no issue with the government. We just roll them out, and now we have the financing system that we are the only people who are doing water as a service being financed by regular investors instead of, you know, some Morgan Stanley or whatever,
Mhm.
right? We're the only ones because we're not the only people doing water as a service, but we're the only ones working with everyday investors.
Gotcha. Can you talk about the competition? I would imagine that there are other companies that are trying to do similar things.
Absolutely. There's a very good company, for example, called Cambrian Innovation, which does a lot of food and beverage. And they do water as a service. In other words, you know, the end user, like you know, Dr. Pepper or whatever, does not have to pay for it,
Hmm.
and they pay by the gallon, and that's fine. Cambrian is venture capital funded. They're a private company, venture capital. Another one is called Seven Seas, and they actually own the water as a service registered trademark. And what they do is they do large um, private projects like water desalination for islands, that kind of stuff. And again, the island people in the island don't pay for it. It's simply paid for like a private utility on the meter, and they're funded by Morgan Stanley Infrastructure Partners, which is a PE fund.
Hmm.
Uh, then the third category is there's a company called Gradient, Gradiant, which became a unicorn last May, and they are servicing the high-end users like data centers, chip fabrication, you know, fuel, fossil fuel, biofuel, renewables, all the high-end water users, and typically that is decentralized, of course, but it's usually not pay per gallon. Usually, a company like PepsiCo can just pay for it, right? And
Hmm.
they usually don't need it. So at the high end, water as a service tends to disappear because large corporations can just they know that the economics of water as a service, they're better off buying it themselves, right? And just paying
Hmm.
and having staff. The problem is that you have to have your own maintenance staff, et cetera. Water service is you just you don't have to worry. You know, the service provider, us, and whoever we delegate it to locally does the maintenance, and they have the sensor networks to go, oh, the filter needs changing, and they come out with a new filter, and the end user doesn't have to think about it. So that is essentially there are early players in this pay per gallon type model, but they tend to be financed. They tend to be private and financed by, um, excuse me, a PE or VC. So OriginClear is public. You, it's it's a penny stock, and then Water on Demand is private, but it's a you know in the process of becoming a NASDAQ company. So both of those will become tradable stocks. And in addition, we are launching crowdfunding where people can get instead of buying Origin Clear stock on the market, they buy it through the Regulation A, which is crowdfunding. They get for let's say the stock's a penny. Well, they get one share at a penny. What's great about it is if the stock goes to 2 cents, they still get it for 1 cent, right? So the price is stable, and they get a warrant, which is an option to buy another share at a penny, and it's for 5 years. So let's say that OriginClear gets to 50 cents. Well, number one, you got that initial share at a penny, so you're doing all right. But then you can use the additional option to buy the 50-cent share for a penny for the right? So it's very exciting. So what's great about that is
people that kind of buy through the crowdfunding, they would have the warranty to buy in the future at the same price.
exactly
Wow.
that 1-for-1. So they got one share at a penny, and the minimum is $250. So, it's what is it, $2,500 that they. I mean, sorry, 2,500 shares. No, sorry, 25,000 shares. I'm a CEO, not a mathematician. Okay. So, but whatever it is, they're paying 250 divided by 0.001. 0.01 is 25,000 shares. So they get 25,000 shares, and they get also 25,000 warrants. They paid 1 cent for that, $250. They got their share, and they have 5 years to wait for the price to go up. If it doesn't go up, they just leave it. It just didn't cost them anything, right? So it's an option. So that's, I think, is very good way to go. And so we're ramping that up at OriginClear. And the good news about that is this does not require people to be accredited, right? Accreditation, you have to make $200,000 a year, or $300,000 if you're a household, or have $1 million net worth outside of your primary home. Well, that accreditation is 1% of Americans. Well, what about the rest? Well, that's where the crowdfunding comes in. So anybody can invest in this up to 10% of their annual earnings or net worth, whichever is greater. So let's say you're making $100,000 a year, then you can invest up to $10,000 per year in OriginClear on this 1+1 type structure. And there's also nice little Kickstarter things like, you reach a certain amount and you get a dinner with the CEO or whatever, fun stuff like that.
Wow, nice.
But the real investment side of it, which you're the personal finance cat, so is that it's an opportunity to buy publicly traded stock at potentially a delta, a gap, because the SEC requires us to have a fixed price on this crowdfunding. So let's say it's a penny, and it's been around a penny for some time, maybe a bit more. But let's say because we accomplished this NASDAQ merger of our subsidiary, now we own maybe, let's call it half. It's not roughly. It's a large piece of that NASDAQ company is owned by OriginClear. Well, that will be reflected, I think, in the stock, and I think, I can't predict it, but the stock would probably go up. And now let's say you go to 5 cents. Well, you've made 5x your money, right? That's the beauty of penny stocks. When they run, do really, really well, as opposed to putting money in an ETF where you're happy to get, 10% a year. So here you get multiples of gain, and then you can double it up with that warrant. So and then eventually we go, wow, we can't keep selling these shares for 1 penny each because it's now, let's say, 5 or 10 cents. So then we pull the offering and refile it at the new price.
Okay.
But in each phase, the price is locked, and people can invest at that price. So it's kind of like, here's the price, here's the crowdfunding at the same price. Now the stock price goes up. Now that there's a growing gap, more and more people start to invest, and then we adjust the price, and then it happens again. And that's a very powerful way for us to raise money, but it's also very, very good for the investors.
So the original investors, once you adjust the price up, can they still buy at the lower price if they haven't fully used their options? or no?
They no, they own the options. So when I went ahead and subscribed on the crowdfunding, you're asking good questions because I got let's say I went in at the 1 penny price. I got them at 1 penny, and that warrant is locked at 1 penny for 5 years for me.
Okay.
When it goes to 5 cents, let's say, then whoever buys it at 5 cents gets a 5-cent warrant for 5 years.
Mm-hmm.
The prior people who went in at 1 cent, the warrant is still 1 cent.
Oh, okay. For 5 years.
Exactly.
Okay. I'm definitely more interested in the financing piece, although your water treatment story is also very interesting. How come you decided to choose this crowdfunding route instead of a venture capital or, a traditional like Morgan Stanley type?
Well, it's really because remember that story about way back in 2005 when I was talking to that fund, want to be a CEO? Well, they said, Riggs, day one, you're going to be a public company.
Mm-hmm.
So by the time we got it done, it was June 2007. We launched the company. By April 2008, we were trading on the over-the-counter market as a penny stock. And that's how they operate, that particular fund. They operate with public funding. Mm-hmm. So right away, we were dealing with Main Street investors. Mm-hmm. And but they had to be accredited. That's the thing, right? We can only work with these $200,000 a year people. Now, I made this stupid move. I went to San Francisco to meet with a bunch of VCs, and they embarrassed me tremendously because they said, "You've screwed it up. You already went public. You fool!" Like, don't hate me because I'm beautiful, And because we were already public, we were already raising money, so we bypassed the VCs completely. Well, they build their whole thing on, rounds A through G. Mm-hmm. Before you go public. That's the whole way it works. Well, if we go public day one, it's over. It's mm-hmm. a different game. So, additionally, I like the freedom of my only bosses are the shareholders. Mm-hmm. I'm the chairman of the board. Of course, I have a board that I have to report to, blah, blah, blah. But my real bosses are the investors mm-hmm. directly. And every Thursday night, I do a Zoom briefing for the investors, which is open to anybody. And we yesterday was number 259 because we started doing the Zoom in January 17th, 2020, when things started to go crazy. And before that, we were doing them on teleconference. But we stay in communication with our investors, and it's a forum where anybody can speak up and tell them what's going on. Like last night, I reported on our annual report and the numbers and the trends and so forth. So that's who I report to. And I think it's very healthy myself. Now, yes, it's true that there's been a lot of abuse in the penny stock world, for example. There's a tremendous amount of, the investors come in early and then they get, what they call crammed, right? Which means they get diluted by later investors. Well, we specifically in 2018, we started to work with these early investors and made them whole. Mm. Brought them current and basically guaranteed their price if they invested more. Well, many of them invested more, and now they're super happy because the total investment is price protected at the original price of investment. Mm-hmm. So I believe very strongly that you got to take care of your investors, and that's why we have this superpower of being able to get companies funded, because we have a base of investors who we've really, it's been a long road, and they have to be patient, but if they continue to play with us, then we make sure that they win, and that's more precious than gold, in my opinion.
Yeah, for sure. So is the crowdfunding type of route fairly new? I think I've heard about it recently, maybe in the last couple of years. People sort of complain, only the very wealthy can have access to these exciting opportunities, early stage, et cetera. How familiar are you with that, funding route? Mm-hmm.
Certainly. So we have done, the bulk of our funding has been working with these accredited investors, right? Mm-hmm. The ones have to make $200,000 a year. Okay. But in 2020, we did one of these crowdfundings, and what we found was it brings it because the investment. First of all, when you market to accredited investors, only a small percentage of the people out there are qualified, so it's very expensive to advertise to them.
Yep.
But if you can advertise to anybody, then all of a sudden your cost of acquisition goes way down, and you can just automate it. Hey, it's $250 minimum. You go to the site, you click, 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 and there was no humans involved, and that's great. But we don't expect it to raise a giant amount of money. But what it does do is it pays for a lot of development of products and so forth, and of course the marketing. But in that funnel, they state how much money they make because they have to do that. You remember they cannot invest more than 10% of their earnings, so they say how much they make. Well, if they make enough to be an accredited investor, guess what? They get a personal call. Because what's available for accredited investors is still a better deal, right? Because on the crowdfunding side, you get a share of OriginClear plus a warrant. That's great, but you don't get a profit share of the water systems. That's for the accredited investors. So people are, and it is what it is. It's still we don't have equality of outcome in the financial world. So if you're not accredited, you'll benefit by being a shareholder. But if you're accredited, you can become an asset holder, and that's attractive. So people come in through this big wide marketing thing that is open to everybody. Everybody gets to play and become a water investor. And then those who are more qualified, we invite them to the what's called Regulation D offering, which is for accredited, and then they become water asset holders. So that's kind of the process. And in 2020 we did it. It worked superbly, and now we're repeating it with, I think, a lot more. 2020, a lot of this was, well, this might happen if this happens, kind of stuff, right? Well, now 4 years later, we really have been executing. Our operating businesses have been taking off in revenue, and this water on demand thing, we really fleshed it out, and it's now moving into a pilot phase. So I think that it's much more real than it was in 2020.
Okay. And you still have the crowdfunding offering available?
Well, it's just starting. So now where we're at right now is a phase called Test the Waters, where people put reservations in, and no obligation. They just put their name in. And what we do is we have to file the registration. We're doing that shortly. And then it takes about 20 days for the SEC to approve it, and then we're rolling. So by the time, let's say, end of May, early June, we will be doing the funding. Meanwhile, people will be able to go to OriginClear.com and sign up with indication, what's called indication of interest, right? They say, I'm interested in putting in $1,000. But we don't want money until it's SEC approved. And they simply put some on the list, and then when it's live, we come back to them and say, okay, we're ready to do it. And it's called Test the Waters, and that's what the phase we're in right now. So until then, until the crowdfunding is approved, we are continuing to work with accredited investors to help to make them, as I say, water asset holders.
Gotcha. And then do you have any sort of pro forma returns that you projected on your website so that people would have an idea of what kind of return they are expecting?
That is available, but it's available from, remember, this is only available to the accredited investors, so it's one-on-one. And we have a model, and we disclose the model. But the problem with the model is it quantifies all kinds of royalties, is that it's still, we haven't done our first pilot. So it's still like, well, I think that it's very sophisticated, but models are built on assumptions, right? So what we said is, look, don't rely on the royalties, because we're going to give you a huge amount of equity in the future NASDAQ company, if that happens, plus OriginClear. So regardless of whether you make, this amount or this amount in the royalties, because we just can't, we can show you the model, but it's not It's not like, for example, real estate development where it's been going on for 100 years and all the models are there. It's like,
Mhm.
well, I want to do another condo development. Boop, the models are out there.
Mhm.
But at the same time, your rewards are much, much smaller than investing in water on demand because we're so early that we're making it worth your while by giving you tremendous position in both companies, in addition to the profit share, which you will have even if you sell your position in those companies, you'll still receive profit shares. It's a
Mhm.
permanent position until the fund is wound up. So it's a very we're being very generous because we recognize that really these people are a founders club. They are coming in at the founding level where the model is not super worked out. I mean, it is super worked out, but it's, I look at it and I go, this is still theoretical.
Mhm.
You know, but the good news is we are busy firming it up with this pilot, which we hope will be committed this year, and then it'll have a tendency to just firm everything up, and we'll know how it works at every level. Cost of machines, the how much revenue, the cost of what people actually pay, um, how many people stick around, clients versus clients who fail. I mean, all these numbers have to be thrown into there so that you understand. It's just like real estate, right? That is built, and we can show you the model, but I think it's theoretical for now until we actually build a series of systems. Now, on the side of selling the computers, on the side of selling the water systems, that's well developed. Our annual report was filed last Thursday for 2023. It has all the numbers you want for our classic business, which is selling machines and
Mhm.
maintaining. But this new thing of water as a service, that is still in development and about to go into pilot. So that's why we're being so generous.
Got it. And then people who buy into it, they would own, the established business as well, because it's part of OriginClear, or no.
Right. So what we did was OriginClear built these three businesses and packaged them up as Water on Demand Inc. and spun it off to become the NASDAQ company.
Mm-hmm.
Now OriginClear will soon have no operating centers. It'll just be an owner of that NASDAQ company, which will be valuable. But
Mm-hmm.
what are we going to do next? We're going to keep doing our superpower and bring in more companies because let me tell you, only 5% of all ventures get funding,
Mm-hmm.
right? Tremendous demand for, hey, can you get me funded? Well, because we don't want to be like Wall Street, just take the money and run. If we raise money for somebody, we have to make sure it's a good company.
Mm-hmm.
And so we're going to become an equity partner in those companies. And that's going to be the continuing. OriginClear will be an incubator, accelerator of these future companies while being um, the largest holder of this NASDAQ company. And, I don't know if you remember, but Yahoo was in deep trouble about 5 years ago, and they were saved by having 25% of Alibaba.
Mm-hmm.
That's what I'm talking about. And having a big piece of a big company gives you book value at your level and enables you to do other things, which is what we're busy doing. Yahoo's still in business,
Mm-hmm.
but frankly, what saved them was this huge multi-billion-dollar um, um, participation in Alibaba. It's a similar situation for us. So I believe that investing in OriginClear right now, where it is at a penny, roughly, is a good investment. Even better if it's done through the crowdfunding. Even better if you become involved at the water on demand level, because then you have a piece of OriginClear, water on demand, and the royalties. So there's kind of a scale. But we've really learned that the regular investor is underserved. We just don't. I look at my wife has a small 401k, and I try and invest it. And I think gold was not good. I think oil is good. No, oil was not good. That you think things are going to be good because on fundamentals they are,
Mm-hmm.
but it's so affected by geopolitical factors and shorts and all this stuff that our investments don't do as well as they could. if we were early stage investors. And that's what we want to bring to hopefully a growing investor base.
Yeah. Yeah. Fascinating. All right. Thank you so much for sharing all that. I definitely get a lot of education. But we do have to wrap up. So I have two more questions for you, general
Sure.
questions.
Go ahead.
Do you have book recommendations?
Well, that's a really, really good point because are you talking about business books or personal?
Either. Yeah. I think you certainly have a lot of knowledge about business. So maybe we can start with that. And then if you have another one to throw out for personal, that would be great as well.
Okay. On the business side, there's a very readable book, which I strongly recommend. It's called The Innovator's Dilemma
Okay.
by Clayton Christensen. Clayton Christensen was an interesting guy. He passed away, but he was very influential on the tech industry because he showed how innovation always starts inside an existing legacy company. And usually the legacy company rejects the innovation because it breaks the model.
Mm-hmm.
And he used one of the examples he uses in this very readable book is the disk drive industry, which started at 28-inch platters and got smaller and smaller and smaller and smaller and smaller. And at each level, the company that launched the next size down destroyed the previous company.
Mm-hmm. Mm-hmm.
Like Quantum used to be a big player in 14-inch. Where are they today? Right. So the point is that and the reason why he said is that the existing company, they have a business model that
Mm-hmm.
depends on certain kind of sales. They don't want to break that business model, but they have to. And
Mm-hmm.
this, for example, he advised Andy Grove on this, and Andy Grove turned around Intel with the Celeron chip because the Celeron chip was designed for the entry level user, which Intel had lost touch with, right? And so, literally, Andy Grove credits the survival of Intel. It credits Clayton Christensen with that survival because he took that advice. I feel very strongly about this, and you've got to be willing to cannibalize your own business in order to. Let me give you a straightforward example. This water as a service, as it grows, we will not be able to give all the business to our own divisions. We'll have to farm it out. Now, that's going to hurt our own divisions, but water as a service is a much bigger concept than building machines.
Mm-hmm.
So we give away the building of the machines because we're the fintech.
Mm-hmm.
Well, that's creative destruction of our own divisions. Now, they won't go away; they'll always have business, but water as a service is far larger than what we could build as a water equipment business. So, the innovator's dilemma is a very, very good one. And then, I read constantly, and what I found is that I kind of switch between 17th century naval battles and science fiction.
Wow, interesting choices.
But I have to tell you that the current TV series Foundation, I strongly recommend people read the actual book.
Okay.
It's a trilogy, and it's amazing. Same thing with Dune. Dune, I read it many years ago, and now they've done a great job with both the old and the new Dune were good, but they were nothing like the complexity and richness of the original.
Mm.
And so, and then Frank Herbert, the writer of Dune, wrote some other great. He wrote a very interesting series called Pandora, the Pandora Sequence, and that imagines that one of these exploratory ships of colonizing people ends up on a planet called Pandora, which is horrible. It's toxic. There's terrible predators, and the series is about what they do to both adapt themselves and the planet to their environment and what happens. It's wonderful. So Frank Herbert as a writer is great. And as I said, I just finished the Pandora Sequence. It was finished by his son because Frank Herbert passed away, and another writer. But the point is that I strongly recommend when there's a good movie, go for the book.
Mm-hmm, mm-hmm. All right. Got some very different recommendations today. Thank you for that. All right. Last question is where can people find out more about you?
Of course, go to originclear.com, which has you'll be able to sign up for my briefing. You'll be able to find out about the crowdfunding, etc. You'll get news about the Water on Demand thing. The waterondemand.net site is being built, but really OriginClear is the place to go.
Mhm.
And I also invite people to join my X, which is RigsEck at RigsEck. And there I basically comment on a lot of things that sometimes don't seem relevant to water, but they are relevant to investing and things like inflation and so forth. So I think it's interesting, and I welcome people to jump on board. And of course, OriginClear on Facebook is always good. But that's of course I think the X is really gaining in importance these days, and we're really doing a lot of our dialogue is on X.
All right. Thank you so much, Riggs. This has been very interesting. Definitely not my usual kind of coverage, but appreciate sharing all that knowledge.
Andy, it was a great pleasure. Thank you for having me.